Affordability has been a huge topic in the real estate industry for the last several years, and honestly for really good reason. Since 2020, we've seen prices go way up, and we've now seen interest rates go up and prices go up. So buyers can't afford as much homes with higher rates. Homeowners don't want to move because they're locked into low rates that bought 2 years ago in the 3 to 4% range, like sub 4%. And then homeowners that have bought in the last 2 years can't refinance yet. Like, those are the major 3 bullet points of the struggles people have been facing. So in this video, I'm gonna break down 2 major things. I wanna break down to just visualize and show. I'm gonna put some stuff up on the screen so you can really see how the change in interest rate affects affordability. And then I'm gonna talk about what buyers have already shown they're willing to do in the overall economy and what's likely to happen when we see rates come down. And before I get too much farther, I want to make sure I introduce myself. If you don't know who I am, my name is Christian Stubbs. I'm team leader and owner of Onyx Homes, which is a real estate sales team based in Southern California. And we make videos like this to give you as much information as possible. So if you're not already on our email newsletter, just go to onyxhomes.com, and right on the homepage, you can subscribe to the email newsletter that we send out every single Friday. All right, so let's dive right in. So we are seeing a shift in the marketplace already this winter. And what we're seeing here is we're seeing prices come down. We're seeing interest rates come down. Now, relatively speaking, prices are the same as they were at like 4 months ago, so let's not go crazy on price drops. And interest rates are peeling back. Now, we're at about the 6.25% range at the time that I'm filming this, which is the lowest that we've seen since April of 2023. So this is great news because we saw interest rates go all the way from 3, 2.5, all the way up to nearly 8%. And now that we're starting to see the interest rates come back down, we're seeing a shift in the marketplace, but not quite what you'd think. Now, the Federal Reserve has already said they're going to start peeling back interest rates over the next couple of years, and this has already affected mortgage rates. So when the Fed does decide to drop rates, it's not going to see a huge drop in mortgage rates because the drops already happened. But let's go into the affordability kind of analysis or overview of how much interest rates affect your payment. So I'm going to use a really simple example, and I've got some numbers here up on my screen so I get the numbers right. And I'm going to walk through this. Now, for argument's sake, let's just pretend and use easy numbers. This is $1 million purchase with 20% down. Let's just make it easy. So we're talking about an $800,000 loan amount. Now, again, I'm not a lender. I'm not going through all those numbers. This is just, I'm plugging into our mortgage calculator that's onyxhomes.com/finance. If you want to go play around with it, you can. So at an 8% interest rate, which is what we saw at the peak of interest rates on this purchase price of $1 million with 20% down, your payment would be $5,870. At a 7% rate, that payment drops to $5,322. 6% rates, which is where we're at right now, brings a payment down to $4,796. So we're already seeing a $1,000 difference between where we were at the peak and where we're at now. So $1,000 in purchasing power more. We're talking about affordability here, and this is showing you how things are getting more affordable as interest rates come down. So this is where we're at right now, is that 6% rate. Now at 5%, which I think is pretty realistic that we're gonna get to 5 in the near-ish future, I'll just leave it at that, is you then go down to $4,294, so $4,300 just under that. So another, what is that, $500 less there. And then at 4%, see 4% interest rates again, that would bring affordability down to $3,819, which is $2,000 less than that 8. So when we were at 3% interest rates, that payment was $3,819. At 8%, which was the top, we were at $5,870. So buyers lost $2,000 of affordability per month when interest rates went up from the 3 to 8. I'm just using round numbers here. Now, obviously, interest rates dramatically affect affordability, but for some reason, not a lot of people are talking about the other aspect that also affords affordability, which is price. And by the way, like I said earlier, if you want to go play around with these numbers on your purchase price and your down payment, your loan amount, go to onyxhomes.com/finance, and there's a full mortgage calculator. I mean, I'm not biased on this one. This is the best mortgage calculator I've seen on all the different websites. This has got so much different information on it. So onyxhomes.com/finance. You can play around with that mortgage calculator there. But let's move on. So price is the other factor. Now, this whole section here I am making for the people who want to wait to make things more affordable. And trust me, I understand. I absolutely understand wanting things to become more affordable. I'm going to say this quote now, and I'm going to say it again at the end, is wealth is built through equity, not through payment. Okay, now let me go through this section and tell me if you feel in the comments down below how you feel about this. Wealth is built in equity, not in payments. Okay, now obviously your payment has to be affordable. Obviously, you have to be able to afford comfortably your monthly payment or it doesn't make any sense. But let's dive into the numbers. So I'm gonna break this down. I'm gonna try to break this down absolutely as simply as possible. When interest rates were at 8%, the median home price was $1.1 million. So 8% interest rates and the average price was 1.1. That was the median price, I should say. Let me clarify. All right, so let's break this down. Purchase price of $1.1 million at an 8% interest rate comes out to a payment of $6,457. Just kind of keep that here. We'll leave it up on the screen for you. But this year we saw prices hit a peak of $1.2 million while interest rates were in the mid sixes. So let's go $1.2 million, 6.5% interest rate, $6,067. So $400, just to round off, $400 less, with prices being $100,000 more. That is how powerful interest rates are on affordability. We saw interest rates come down by 1.5%. We saw prices go up $100,000. So people that bought in this year, this last year being 2024, technically it was more affordable because the payments are lower. But last year it was less affordable, but $100,000 difference in price. Okay, now I'm gonna go a little bit farther than this. So here's the point that I wanna make. Buyers have proven they are willing to pay that $6,457 because they did. They did all summer long when rates were 8%, prices were 1.1, people were buying. And again, this is median, so this is a very good baseline. Not saying this is your budget, whether it's higher or lower, that doesn't matter, but the overall market has shown that buyers are willing to pay that amount. Remember that number, $6,457. Now let's see what happens if interest rates come down to 5%, which I think is, like I said, very likely in the somewhat near future. To not pin myself to anything. Let's look at what this looks like. So if we take the principal and interest payment of $6,547 at a 5% interest rate at 20% down, that gives us a purchase price of $1.52. So $1,520,000 at a 5% rate is what gets us back to that same payment. So again, remember I said the people that are buying in 2024 are technically more affordable because the payment's lower than it would have been at 8%. And the price difference is $100,000 higher, meaning it's more expensive on the price, less expensive on the payment because of the interest rates. Now, if we fast forward to rates being at 5%, if the buyers run payments up to where they were at before, that means prices have room to run up to $1.5 million, which is a huge jump over the 1.2 we just saw. Now I'm going to return to that quote that I said earlier, is wealth is built in equity, not in payments. So the people who maybe got off the fence, if this is you now and you're sitting on the fence, this is who I'm making it for. And if you bought years ago, or even last year, the year before, great, that's awesome. Homeowners build wealth over time. There's an amazing quote, and I don't remember who says it, but you do not wait to buy real estate, you buy real estate and wait. So if you're sitting here waiting for things to become more affordable, your payment, yes, probably will become more affordable as time goes on. My concern is that you're gonna miss out on the wealth of price appreciation. Now, I'm not saying for sure prices are gonna go to $1.5 million in the next year or two, but I think it's pretty realistic that if you zoom out and you look at the real estate market, prices have gone up over time, period. Now, let me leave you with this last point, is the worst purchase maybe of all time in real estate was the person who bought right before the market crashed in 2008. Here's 4 bullet points I want to make for you. Let's assume, and a lot of people did, so I don't want to make a big assumption here, but let's just assume that this person was able to keep their house, because a lot of people weren't, but most people did. They were able to keep their house and they haven't refinanced, just for argument's sake. No, pretty much everybody that bought 16 years ago has refinanced at 2.5%. Totally different story. But anyway, So point number one is they've owned their home for 16 years and they're more than halfway paid off with their mortgage. Point number two is they bought at a median home price of $500,000 here in Orange County. Yes, you heard that right. The median home price dropped from $500,000 to $355,000. From '08 to '09, prices dropped from $500,000 to $355,000. Yes, you heard that right. They've had 16 years of tax benefits, and their home is worth now, median, $1.2 million. Maybe just a hair less than that right now. But that is a $700,000 increase, or a 2.4 times increase over what they bought the house for. Now you tell me, did this person buy at the absolute worst time ever? Yeah, they did. Did it turn out to be all right for them because they were able to hold on and wait? Absolutely. Now, of course, I'm going to hear this in the comments below for sure. If they could have waited one more month, they would have bought it at $355,000. Yeah, they would have had a little bit better return for sure. But because they bought at the worst time ever and they've held their property and kept it, they have built a tremendous amount of wealth. $700,000 in that median home price is massive. Now, I want to make a big disclaimer here. Probably should have put this in the beginning. I'm not saying this is the best time to buy real estate. I'm just saying that if you are sitting waiting for things to become more affordable, make sure you understand what you're waiting for. If you're really truly waiting for your payment to become more affordable for that dream home, this is the message that I wanted to give for you. And this is something we talk about a lot with our clients, especially for first-time home buyers, is your first house is very rarely your dream house, and it's very, very rarely your forever house. I have a lot of clients that I talked to that bought 3, 4, 5 years ago, and they didn't quite get what they wanted when they purchased. And fast forward over the last handful of years, they're very glad they bought when they did, and they're just sitting and waiting while that equity is building. So again, if you're sitting and you're waiting for affordability, this is my message to you. But at the same point, it totally depends on your unique situation. So if you want to chat about yours, go ahead. You can reach out to us a lot of different ways, but you go to onyxhomes.com/finance to play with the mortgage calculator. If you want to talk about next steps, if you're thinking about buying something, we offer totally free, no cost, no obligation, a home buyer strategy session with all of our clients who are thinking about making a move. So if you want to do that, go to onyxhomes.com/buy, or just click on the buy tab on our homepage, and I'll see you there.